Hi guys, welcome back to Tipranks. My name is Annika and here at Tipranks we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're looking at Alphabet stock, so this is an update video on that. And before we jump into this video, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the Tipranks channel releases a video. Also, we've launched Tipranks TV, which is now live, and I've linked that down below in the description box. This is where you can watch all our financial content in an ad-free space. And just a friendly reminder that Monday the 7th, which is tomorrow, Julie, Richard and I are hosting a Twitter Spaces event where we're discussing the markets and the stock market news on there. And on Tuesday the 8th, Julie and I are co-hosting a female leading women of Wall Street workshop panel session. Now, without further ado, let's talk about how the Alphabet stock is heavily discounted and how the cloud growth is underrated. As you know, Alphabet, which is the holding company of Google, which has a ticker GOOGL, is currently very discounted in price amidst the market pressure it's seen. They've been experiencing a lot of pressure amidst this market correction, especially given what's been happening in the news with the Ukraine-Russia crisis. Despite this, Alphabet reported stellar Q4 2021 results, but the stock price failed to sustain a rally. Some of these broader market woes is making many forget that Alphabet has remarkable strength. And this strength is likely to shine through once we see the volatility subside. I feel like Alphabet stock has been unfairly tossed to the bin because of what's been happening with its stock price. But the company is firing on all of its high quality business segments, its YouTube growth, its cloud growth, and all of this is expected to get better over time. The current price for Alphabet stock with the ticker GOOGL is $2,638.13. The analyst rating consensus is a strong buy based on 30 ratings. All of them are a buy rating. And the analyst price target is $3,499, which is a 32.63% upside based on these 30 Wall Street analysts offering 12-month price targets. On February 1st, 2022, Alphabet reported its Q4 2021 earnings, and the initial post-earnings reaction was very positive, but it didn't take long for the markets to drag the shares back to where they were before the big Q4 2021 reveal. It's as if the Alphabet's big Q4 beat came mostly for free when the shares retreated from nearly $3,000 per share to back below $2,700 per share. But think about it. Sometimes the markets get it wrong. In an environment that punishes extended valuations and a lack of profitability prospects, Alphabet is an innocent firm undeserving of such excess selling pressure. But again, a lot of this has been coming from the market volatility we've seen with the Russia-Ukraine crisis. A lot of tech stocks have seen sell-offs. Not only did Alphabet crush expectations on the earnings front, but things were looking up across almost every segment, ranging from search to YouTube and even Google's cloud business. And Google is synonymous with search, given its dominant share in the space. As you can see, this is the share of desktop search traffic originating from Google in selected countries as of January 2021, and it holds the majority market share in most countries. But actually, it's the latter two segments, so the YouTube and the cloud, that could become more meaningful growth drivers moving forward. In fact, during Alphabet's Q4 earnings, Google Cloud revenue jumped 45%. The revenue from Google Cloud in the fourth quarter was $5.5 billion. But it's important to note that Google Cloud is trailing Microsoft, Azure, and Amazon's web services in the cloud scene. Still, the bull case sees Alphabet continuing to add to its cloud strength to catch up to them. But despite the fact that Google Cloud is not the leading share in this lucrative market, this should be seen as an opportunity to take share in the shortcoming, especially under the leadership of Thomas Kurian, which is the current CEO of Google Cloud. Kurian has made big reorganizational moves behind the scenes to bolster Google Cloud's growth over the past year. This man is ready to bring Google's cloud revenue growth to the next level, and early signs show that his efforts are starting to pay off with what we saw in Q4 2021 results. The Tipranks Smart Score for Alphabet is a 7, in that it is neutral when it comes to outperforming the market, but it is more skewed towards outperforming the market. Analyst ratings are a strong buy. Tipranks investors are very positive. Blogger opinions are also bullish. News sentiment, however, is neutral. Hedge fund activity has decreased and technicals have been negative. But the return on equity is 32.07% for the trailing 12 months. It's also important to know that Google's interconnected ecosystem of software solutions gives it an enviable competitive position relative to other firms. This facilitates the substantial sums of money it earns from Google, YouTube, and the Play Store. In fact, it's one of the most entrenched tech companies out there, controlling many popular apps as well as the most popular mobile operating system. And Alphabet, Meta, Apple, and Microsoft are working on the metaverse. Many have been working on building metaverse and VR-related products behind the scenes. But is Google more undervalued than Meta? Well, Meta is quite a controversial social media and metaverse firm. As you know, it was formerly known as Facebook and it got renamed Meta Platforms. So this got a lot of media attention, but Alphabet has had its tides turned in its favor. Given the remarkable strengths we covered, Alphabet may actually be more undervalued than Meta despite it seeming to have a hefty valuation. Many analysts believe that Alphabet deserves a premium for its growth, given its wide moat seems less penetrable than the likes of a firm like Meta. That's really starting to feel the pressure of its rivals. So guys, what do you think of Alphabet? Do you think it is heavily undervalued? So leave your thoughts in the comments below. We at Tipranks love to hear from you. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the Tipranks channel releases a video. Remember, this is not financial advice. Make sure you do your own research before you invest in anything. Also, we have Tipranks TV, which is live, so check that out. It has all of our financial content in an ad-free space. I've linked that down below in the description box, as well as the events that Julie, Richard, and I are hosting. I'll see you guys in the next video. Bye!